Welcome back to MATCH B2B INSIGHTS, everyone. I'm Daniel Weiss, here with Benny. Always a pleasure, mate. Today, we're going deep on a topic I keep seeing founders stumble over: why actual market momentum always beats investor hype. There's this pattern. Founders get distracted by the idea of what will get a VC's attention. But the top VCs? They're looking for real signals, user engagement, product adoption, and growth curves rooted in the actual market, not vanity press or buzz.
Yeah, Daniel, and let me tell you, I've worked with so many Israeli teams who think if they just pump enough likes or activity into LinkedIn, that'll be enough. I had this Herzliya startup. They obsessed over engagement stats, cranked up the posting, but didn't move the needle on user numbers. When the investors dug in, it looked like weak product market fit, not momentum. The team didn't even realize they'd shot themselves in the foot.
Absolutely. I've got a fintech client from London, early stage. Instead of talking about their roadmap or future plans, they shared real, hard data, a wild waitlist curve, actual usage data. That alone drove a competitive Series A because it showed real heat, not manufactured noise. That's what we need more of, actual traction.
It's like chess, Daniel. You can't win by looking flashy in the opening. You need to build your position with real moves. Otherwise, you just impress people for a minute and then poof, nothing left. All right, let's talk about messaging. Daniel, have you seen the latest SaaSbench 2024 research? Pain-driven messaging outperformed feature-based messaging by, 70% higher deal velocity? That's huge.
The data doesn't lie, Benny. Features rarely move revenue. Pain and real outcomes do. If you're not speaking directly to the CFO's real headaches or the operational costs your product cuts, you're pitching into the void. I always ask founders, if you strip every feature away, what pain do you solve and how fast? That's the starting line.
I remember this cyber client of mine, classic Israeli engineering team. Brilliant spec sheet, put you to sleep in a heartbeat. The minute we switched to talking about compliance nightmares faced by CISOs, everything flipped. Same product. They doubled ARR in, 9 months. It's what buyers hear, not what you build, that drives revenue.
That's exactly it. Even from the buyer psychology side, relevance is everything, like we discussed on our episode about global buying behaviors. Pain first always wins the attention economy. Moving on, too many founders try to turn basic numbers into a story that doesn't hold up to scrutiny. Let's dig into making data a credibility asset, not a hype machine. A while back, at a 10-person SaaS shop, I set up dashboards in Pipedrive and Brevo that let everyone, from teams to investors, see exactly what mattered. It made our story bulletproof. The updates were real, no stretching KPIs, no fancy vanity numbers.
Yeah, you nailed it. In chess, you can't sell your queen for a clever opening. Don't burn your social proof just to juice your next fundraising round. I've seen founders crow about active users, but you dig deeper and it's mostly freemium tire kickers. Don't chase the short-term win at the cost of long-term investor trust.
Exactly. Metrics should align to the business pain you actually solve, not what just looks good in a deck.
And credibility isn't just the numbers, right? It's how you shape the story behind them. If your metrics say churn is high, explain why and what you're changing, not just the pretty side. Investors respect transparency, especially early on.
I couldn't agree more. Build the narrative that takes your data and wraps it in long-term value context. And don't neglect building real relationships with your early adopters. Case studies and honest testimonials are gold. That authenticity, paired with open investor comms, sharing the good, the bad, and the ugly, builds serious trust.
You're not just selling results, you're showing resilience. If you unlock that mindset, you stand out in any pitch. Let's drill into storytelling because it makes or breaks the investor pitch. Your journey, what you've overcome, and where you're headed, that's what sticks emotionally. I've seen decks loaded with pretty graphs that fall flat. But one founder who spoke about her struggle to onboard her first 5 clients, that's stuck in every VC's mind.
You want investors to feel something, not just compute ROI. Illustrate wins, sure, but also tell stories of the bumps in the road, what you learned, how you adapted, and link it to their interests. Here's how we're aligned with your fund's focus on market transformation. Make your data relatable by wrapping it in a customer's story.
Absolutely. Find the details within the journey. Tailor it for each investor profile. You want them thinking, this founder gets my world and knows how to move in it.
Visibility isn't just about being loud, it's about targeted communication. You need an investor comms plan, share key milestones, what's coming up, and how you're mitigating risk. That keeps investors engaged and prevents nasty surprises.
Regular, substantive updates. You want a rhythm. Mix in qualitative stories from users with your metrics. Stay open and transparent, otherwise you lose trust and momentum. I've seen companies pull off webinars and live Q&As that got their investors properly invested. Real back and forth, not just a one-way broadcast.
Exactly right. The investors who feel included, who see you asking for feedback, they're much more likely to support you when it counts. Let's switch gears. Growth demands robust infrastructure. Nothing derails scaling faster than an overloaded system. First, get honest about bottlenecks, whether that's tech limitations or a team running on fumes. Prioritize what needs investment to keep the engine humming.
Yes, and don't wait for the first crash before you act. Start automating routine stuff, billing, lead routing, onboarding, so your people focus on work that scales the company, not just keeps it running. I've seen startups get locked up by spreadsheets and late-night patch jobs. Don't be that cautionary tale.
Monitoring and feedback loops are key. If you're not spotting weak points and evolving, you're setting yourself up for expensive headaches later on.
Market fit's never a one and done. You need regular check-ins with early users to spot missed needs and sharpen your pitch. That's how you make your value prop too sticky to ignore.
Use hard user engagement data, not gut feel, to pick what features make the next cut. Then, roll them out in phases and watch closely. If the new stuff flops, pull back fast. The phased rollout's your safety net. Don't bet the farm on untested changes.
Right. Product and market fit is a dance. The customer leads, you follow, and sometimes you step on a few toes, but the feedback gets you in rhythm.
Now, founder-investor alignment. It's not about flashy decks once a quarter. It's about regular, strategic check-ins where you ask for feedback, not just approval. Bring tailored decks to these sessions. Show not just where you've been, but where you're going and why it matters to them.
And don't be afraid to keep the line open for honest dialogue. Investors have deep pattern recognition. Get their input. Don't just dump data on them. I'll say it again. The best founders treat investors like actual partners in the process. Let's pull the lens wider. Visibility isn't just about warming up investors. Match your comms with your growth. Keep your milestones and investor interests synced. You want your audience hungry for the next update, not tuning out.
And don't stick to one channel. Newsletters, socials, industry events. Mix it up. Each reaches a different set of eyes. But most important, build in mechanisms to capture feedback, so you're not just broadcasting, you're evolving and deepening the relationships. Growth hacks aren't just inside your company. Partnerships are rocket fuel. Find partners that complement your strengths and set crystal clear value props from day one. Don't just shake hands, define the win-win on paper.
Absolutely. Co-marketing deals, channel partnerships, they open doors you can't kick down solo. But revisit the terms, check the performance, and don't be afraid to pivot if a partnership isn't working. You want compounding wins, not dead weight. Here's one I can't repeat enough. Listen to your customers. Make feedback loops concrete. Survey them, talk to them, dig into usage data. That's your secret sauce for rapid, smart iterations.
Product teams need agile processes so feedback gets actioned, not just archived. Then, bake those success stories into case studies, not only for more users, but as validation for investors watching from the sidelines. Let's talk adaptability. No team survives on autopilot. Build learning and training rhythms. Keep people sharp on market trends so you can react fast when things shift. The market will change. Your job's to keep your team flexible.
Yeah, regular feedback sessions and open innovation discussions. Think of it like updating your chess opening book. The game moves fast. You've got to be ready to improvise and adjust your plan, even mid-game. Let satisfied customers sell for you. Build advocacy programs, incentivize referrals, invite customers into beta groups, and turn happy users into your marketing engine. The returns are massive compared to shouting in the void.
And encourage user-generated content like testimonials. Strong customer success frameworks ensure post-sale engagement, which builds loyalty and creates organic advocates. It's marketing you don't have to pay for. Resilient growth isn't just scaling when things go right, it's planning for the bumps. Build real contingency plans for what might go wrong so the business continues, no matter what market curveballs come at you.
Scenario planning needs to be baked in. Map out what you'll do in different futures so you aren't scrambling. Teams that train for change handle setbacks better and come through stronger.
Get granular with your analytics. Connect your customer, market, and ops data into unified dashboards. Make faster, sharper decisions. And make sure your team's data literate, from leadership to front lines.
Set up recurring strategy reviews. Look for patterns, trends, and blind spots. A quick data scan can keep you out of trouble or point to new growth signals before the competition even blinks. Long-term growth is really a learning game. Invest in training, constant updates, and spread learning by running internal workshops. Your best insights come when the team shares what's working and what's not.
Set learning goals and track progress. If you want agility, make growing your people just as important as growing your revenue. Experimentation cycles, launch quick tests on features and campaigns, measure and double down where you see traction. Agile teams win because they don't linger on things that flop, they pivot fast.
Segment your outreach for maximum conversion. Deploy cross-functional teams that are empowered to act. Don't make every tiny adjustment wait for permission from 6 managers. Real-time adjustments win the race. Every interaction matters. Map your full customer journey, look for pain points and improvement areas at each stage. Then build onboarding and education so users instantly see the value and stick around.
Personalize those touch points. Use targeted communication and data-driven offers to build emotional connections and boost retention. It's what turns good customers into loyal advocates. Growth is never static. Set and review your KPIs, iterate your strategies based on what the data reveals. A/B test everything and invest more where you see results. Always dig into CLTV. Identify your high-value segments and go deep on those relationships.
If it can't be measured, it's a hobby, not a growth strategy. Let your winners ride, cut your losers early. The numbers will show you the way.
Leadership isn't just C-level, it's across your whole organization. Build programs to identify future leaders, set training paths, and empower people to own strategic outcomes. Everyone should feel part of the company's vision.
Hold regular sessions for alignment and feedback. It shows your vision is long-term and you want shared ownership. Celebrate innovative thinking and empower accountability, so leadership becomes a muscle, not just a title. I know we talked adaptability earlier, but I can't stress it enough. The winners in B2B are those who learn and adapt fast. Train your team, share industry updates, and build plans flexible enough to twist with the market, not break.
A feedback culture is what lets you pivot instead of freeze. Let your team experiment, innovate, and openly share lessons. Flexibility in action, not theory, keeps you in the fight longer. Now, on to technology. It's your silent force multiplier when done right. Start by automating low-input processes like onboarding or lead scoring. Choose scalable solutions like cloud tools to handle demand jumps.
But don't get seduced by the newest shiny platform. Benchmark the performance, collect user feedback, and refine your stack so tech drives growth, never the other way around. Technology should serve strategy, not outshine it.
Worth highlighting again, automation and scalable infrastructure are non-negotiables. Invest in tools that connect your sales, marketing, and product. But always check the ROI. You want seamless, not complicated for its own sake.
Totally. And don't over-engineer it. Keep iterating based on real-world feedback. Otherwise, you end up with a spaghetti stack that actually slows you down.
When it comes to growth, it's easy to focus on the next quarter, but the real winners track long-term value, things like CLTV, brand loyalty, and broader impact. Set up periodic reviews that look at how your solution delivers lasting change, not just a quick win.
Loop in feedback from every angle. Customers, partners, analysts. That's how you spot blind spots and opportunities to refine your positioning for lasting influence. Think big picture, not just this month's numbers. And don't ignore sustainability. It's on every serious investor's checklist now. Plug ESG metrics into your operation, work on greening your supply chain, and set real goals with timelines. Don't just talk a good game, prove it and show your progress regularly.
It's not just about ethics, it's genuine risk management. Reporting on these metrics signals to the market you're thinking long haul and aligning values with both investors and customers. Last couple, Benny. Every resilient plan starts with direct scenario planning for supply chain, revenue, and team risks. Map, stress test, and rehearse the response. So when turbulence hits, you're ready, not scrambling.
You gotta inject that mindset into the team too. Get everyone comfortable with change and a little uncertainty. It's almost like building muscles for resilience. Routine drills and honest risk conversations really do pay off.
Before we wrap up, a little bit on how Match B2B operates. We're all about low-cost, disciplined, organic channels, no lighting money on fire for vanity spikes. We help you build sustainable traction that lasts long after the fundraising hype passes.
Yeah, and our sweet spot's helping you connect those early signals. Traction, conversations, inbound leads. So you don't just get funded, you're set up to execute after the round closes. It's a single, integrated, measurable system, not a bunch of disconnected marketing hubs.
And we're hands-on with founders and executive teams. Because when you align strategy, marketing, and sales up front, growth takes care of itself, and your capital strategy, product focus, and trust with the market actually line up for once.
Don't forget, if you're heading into the US or Europe, Match's specialty is bridging those cultural and GTM gaps that usually trip up Israeli companies abroad. We thrive in uncertain, evolving markets and help you turn that lack of clarity into a real strategic advantage.
Plus, for Israeli startups, there are incredible Ministry of Economy support programs out there, worth every minute to explore and leverage.
All right, Daniel. I think we've left everyone with a lot to chew on today.
Definitely, Benny. And as always, thanks for joining us on Match B2B Insights. Next episode, we'll dive even deeper into building authority that wins the new buyer. Benny, always a pleasure, mate. See you next time.
Thanks, Daniel. Loved it. And thanks to all of you for listening. See you soon, folks.